Welcome back, folks. In this video, I want to provide you with a lesson on price action, how to read price to get sniper entries. Okay, that's what this lesson is about. And I'm going to focus on price action here, right? Because that is the London session. Okay, now before I get into the details of how to read this price action, I want to set some context. Okay, so in VIP, we were yesterday looking for lower prices, right? So I provided a bias that we're looking for movement down to 3250. So this was given to everybody inside of VIP, okay, only a day ago, right, yesterday, Wednesday, or at least below 3280, okay. Now, if we look at yesterday, so that's up here, this is Wednesday's price action, right, so this is the hourly time frame. Now, the bias that I provided to students was that we're looking for movement below these equal lows, okay. So you can see the price on the right-hand side, 3280 from all the way up here, right, this is Wednesday's price action, that's when the bias was provided. Okay, 3280, which is the liquidity residing under all these swings, okay, and ultimately the target was 3250, okay, and that's where we've got to, right, 3250, and had a nice reaction. Now, why 3250? Because that is, here's the daily chart. You can see that this here is the bullish order block on the daily chart, okay, the open, if you look at price up here, the open of that candle is 3250. Now, I've been calling that in VIP from this level here. Once we've got inside of this bearish fair value gap that we in VIP traded up to, once we saw market was bearish and got our bearish signatures, then this fair value gap, right, became our immediate target, followed by this bullish order block 3250. So that sets you some context, okay. And so in the recent price action, right, this was in Asia, okay, so this in New York is the overnight session, right. Now I did some trades here that I've already posted, okay, you can see them on my Twitter profile, right? So I did a short, right, in Asia, and then also did a long in Asia as well. Okay, so that's this short here, right, from 9 p.m., okay, down to this liquidity pool, and then a long from here, okay, up to that level there. Okay, now that's not really the purpose of this lesson. What I want to focus your attention to is this price action. Okay, now let me also just mention that yesterday, this movement down, VIP also traded that. Let me show you a couple of things that I do inside of VIP. So this is yesterday. Now, as price was moving up yesterday, I've given some guidance to VIP, okay? And I've said to them that I'm not buying into this move up, right? It's manipulation, okay? Because on Wednesday here, we are moving up. And I want to make sure my students realize that this is manipulation. This is not the real move, right? This is where the dailies come into, right? And this should be moving down, and that's our immediate target, followed by 3250, the ultimate target, which is our bullish order block, okay? And that's important that I let them know that, because I don't want them to get sucked into the manipulation, okay? Now, further along in New York, we identified the last leg of this market maker sell model, and this is what I've provided them with, okay? This is the post, you can see it here, the last leg should get an aggressive move down, okay? And this is New York, okay? We're expecting a movement down, right? So VIP, many students traded this down, beautiful movement down, okay? Down to the immediate liquidity pool, okay, and previous daily low, and even lower down to that 3280 and even 3250, as you've seen we've got, okay. Now, when I provide those sorts of details for my students to engage with price, then most of the time I also provide a lesson. So here's a lesson on that, and here's the output of that, right? You can see we've got to the targets, okay. So from up here all the way down to the immediate liquidity pool on the day, the immediate consolidation from where the market maker sell model started, previous daily low, and obviously 3285, which is where that daily fair value gap is. And then how I traded that, right? So this is my trade on that as well. So they're just a quick snapshot on the kind of guidance provided inside of VIP. Okay, so I just want to provide you with some context. Now, let's look at this price action, right? So if I've provided guidance that 3250 as a daily bullish order block, that the draw on liquidity is where the market's headed, okay, that doesn't mean you automatically, as a student, engage with price. You want to see some kind of confirmation, right? So many traders are not comfortable buying when the market's dropping like that, right? Now, those who are nimble, who understand what the draw is and understand what's going on and how to reprice, can engage with price as the market's dropping. But it's a lot easier than that. You don't have to try and catch the falling knife, right? It's a lot easier than that. You can wait for when the market shows its hand, okay? So this here is easy price action to engage with price, okay? Before I get into that, let me show you on a 15-minute why that's important, okay? So you can see that as price is moving up, we're seeing momentum, right? Bullish Fibonacci gaps on a 50-minute time frame, which is what I mentioned to VIP today. I said, look, I'm not interested in taking a long in this market until I see momentum in the form of bullish Fibonacci gaps on 50-minute time frame and or the hourly time frame. So if we go to an hourly time frame, we also have a bullish Fibonacci gap. Okay, that's important. So the whole premise of why I want to enter, this is now coming down into the bullish Fibonacci gap, right? At what time? London. And we also have breaker, right? Low, high, lower low, higher high, pull back into Fibonacci gap, breaker, and bullish order blocks. Okay. Now, how can we confirm this on a lower time frame? That's what I want to teach you. Okay. So if you drop down to a 5-minute time frame, what do you see here? If you look closely, this here is a small market maker buy model. Okay. So there's a couple of things that you can do depending on how nimble you are, right? How confident you are. Firstly, if you look at this, we're going down, down, down. Okay. Consolidation. Where is this happening? Inside of this Fibonacci gap. What time? Right? At the London kill zone. Right? ICT says London kill zone starts from 1 a.m. 1:30 is a very key time. It's 30 minutes within that hour. We see consolidation where we're dropping down into this Fibonacci gap. And we've also got the higher time frame context behind us. As I've said, we've got the daily bullish order block behind us, as well as the hourly bullish order block behind us, as well as 15-minute bullish order block, 15-minute bullish Fibonacci gap, and the 15-minute bullish breaker. So a lot of confluences there, okay? But many traders are not comfortable buying as the market's going down, especially when you see these big down candles, right? These big down candles. Traders are scared this will keep going down. So if you're not nimble, you may not be comfortable. That's okay. But what do you see here? Market maker buy model. This is the sell side of the program, right? Reaching for a key discount PD rate on multiple time frames, okay? It's easy when you see this displacement. What is this displacement? This is the last swing that created this low coming into this PD rate on this time frame as well as other time frames, okay? Now we have this displacement up, okay? We've now broken market structure, push down. So you've got one opportunity to engage as price and accumulate long positions, okay, at a key time, 1:30 a.m., right, London, okay, coming into key price. So you got time and price, right, multiple confluences. If you're not comfortable there, you wait for the displacement, pushing down, right, into inversion Fibonacci gap, okay. This is now the new hour, okay, so you've got a second opportunity. If you're still not confident, you can wait for this pullback. Again, this is at the next hour. This is now 3 a.m. coming into this bullish Fibonacci gap. So there's lots of confluences there, opportunities, right? So let's mark them out. So we've got this one here. Okay, now that time, as I've said, is 1:30. You can see the consolidation coming into that discount PD rate in the form of a bullish Fibonacci gap, which is in confluence with 15-minute Fibonacci gap. This is the 5-minute chart, the 1 hour Fibonacci gap, and 50-minute bullish order block and 50-minute bullish breaker. So a lot of things there. Okay, now if you're not comfortable with that, then you can wait for this entry. That is a new hour. Okay, that's now at 2 a.m. Right? If you're not comfortable with that, you can wait for the next hour. It's every hour that you should get an opportunity. Okay, so we're coming into this bullish Fibonacci gap at again another hour. This is now 3 a.m. right? So if you look at price, right, regardless of the PD arrays that are offering us the opportunity to accumulate, we can see the market's coming down, down, down. That's a downtrend. Okay, when's that downtrend broken? Well, this is the swing high that formed this low coming into a discount PD array. We have a movement up with displacement. That's a break in market structure. Okay, this in itself on this chart is your bullish order block, and you've got a Fibonacci gap. This push down is enough as an entry, right? Stops can go under here because we should not come back under here. We've got consolidation and multiple confluences on high time frames for accumulation. Okay, so that's your key. Down, down, down. Change in direction. Buy sell now change. Sell program, buy program, market maker, buy model. Right? At a minimum, depending on where you get in, you can just target the high of that market maker buy model more than 100 pips. Right? Or just look at other premium levels, maybe back up into here. So the exit is easy, right? That's up to you. So depending where you got in right now, you're up over 180 pips, right? Even if you got in any of these opportunities, right? 160 pips from that or from this level, these are all opportunities to accumulate 140 pips at key times, right? This is 1:30, this is 2 a.m., this is 3 a.m. Main level here, but then there's additional levels at each one of those key times, okay? Time and price alignment, okay? So you got to go back and you got to study the charts. You got to pause my video. You got to go back and look at what I've shown you on your own chart so that you can imprint what I've explained and what I've taught you in your brain so that you can identify these in real time, okay? Hope the video is useful. I will now talk with you in a future video.